Hello fellow traders, Marv Eisen here again from Timeless Dollar Trading Academy, and in this video I want to help those of you who have been losing more money than you should. Probably, maybe you're making money but maybe not as much money as you could. So I want to just point out a few tips about trading that might help you. Now if you've seen any of my previous hundreds of videos, you already know that I use the previous day's close, I use the stochastics, and I use the tailored trading range to set up my chart in the morning. And this is how I set my chart up. I have the tailored trading range down here. I have the previous day's close, and I have the stochastics, and I use a relatively fast stochastic 733 for those of you who are familiar with stochastics. But stochastics is really a confirmation of price. Don't take the stochastics as the end all and be all of where prices are going to go. In other words, where stochastics are oversold, our price is going to go up. If they're overbought, the prices are going to go down. That's not the way that you need to look at stochastics, but I'll go into that in a minute. And so here's how the market set up on Thursday, July 31st. And there were no market moving announcements pre-market. And prices were opening well above the previous day's close, and of course well above the predicted trading range, the forecast trading range, where prices are likely to trade within the predicted trading zone according to Taylor's calculations. And so let's take it as the day progressed. And I want to point out something, and as I said, if you haven't been making as much money as you should, or if you've been losing money, remember that, number one, nobody knows where the market is going to go, and number two, the market is going to try to trick you into making a trade against your best interests, okay? So I always suggest wait for a half an hour to an hour after the market opens, play its volatility game, and then you can really see which way the market is going to move. And so let's see how the market moved on Thursday morning, July 31st. And I have the candles coming in. And by the way, these are 10 points between each horizontal line on this chart. These are not small numbers. It's $500 on an E-mini between each horizontal line on the chart. And I'm going to stop the action right over here. And as you'll see, prices opened well above the trading zone. And so it would be a very, very simple guess to believe that the prices are going to go and immediately go down into the trading zone and hit the previous day's close. Wouldn't that be easy, right? But of course, the prices teased going down there. But then look what happened with this candle right over here. Okay, you see this? Basically a hammer at the bottom of a decline, and of course that is a candlestick setup. Now candlestick setups are one of the 6 trade setups that I teach in my course: gap, support and resistance, trend, time and price, momentum, and candlestick. And the candlesticks that are going to be most noticeable to you are the hammers and the shooting stars. Now the hammer is where you have a candle where the shadow is at least 3 times the length of the real body, and it is at the bottom of a decline. So this candle came at the bottom of the decline, and the stochastics confirmed it, okay? I'm not saying the stochastics then look at the candle. Look at the candle and see if the stochastics confirm it. This is a sign that it's highly likely prices are likely to reverse here. And look what time it is. It's not even 10 o'clock where I stopped the video. And so I said, wait for about a half an hour to an hour after the market opens. Let the market do its little fun and games, do its wiggle around, and try to fake you out, because that's what it's going to do in the first half hour to hour. So that in itself is very helpful, okay? And so let's keep going as the day moved on. And so we see prices are generally moving in the direction that we would expect based on the previous day's close and the trading zone. Remember, the prices very, very often, in fact almost always, trade within the trading zone. And so if we clone the trading zone, and you know that I do this all the time, we clone our trading zone to see if prices put in the range of the day, almost within 4 points, all right? And then if you were smart, and if you did catch it, you could have caught 15, 20 points easily, maybe a little more, and then quit for the day. 20 points, $1,000, okay? Or $100 on the micros, not too bad, okay? And you could basically take the day off. So now let's move over to Friday, August 1st. A much different price action, much different setup, but still the same trade setups that we can use to make money on Thursday or any other day we use on Friday. Let's go over to Friday, August 1st. Here we are on Friday, August 1st, about an hour before the market opened, and I have my trading zone drawn out, the previous day's close, and prices opening well below those markers. So let's see where prices moved beginning August 1st. Now, there was an important announcement Friday, August 1st, and I'm going to bring it up. The U.S. employment report came out at 8:30. This is a market-moving report, and the employment report showed that there were 27,000 fewer jobs than had been forecast, okay? The forecast was for 100,000 jobs to be added. Only 73,000 jobs were added. So that would indicate that the economy is contracting. Let's see what that did to the market. And here at 8:30, when the prices were announced, and I'm going to move the price forward a little bit, the price movement of the S&P, not very much. Surprising, not very much. And remember, the report is out 8:30. The market reacted and basically did nothing because just prior to the report and after the report, prices are identical, about the same. Very surprising. So we would expect that prices would go into the trading zone. So let's see if they did go into the trading zone on Friday, August 1st. And prices came down well below the trading zone, well below the previous close. But then again, they did dip down overnight, so I think it was not unexpected that the jobs report was going to be negative. But prices really dipped down at the open. Now here, at just about 10 o'clock, prices moved down. Let's see, there's 10 points between each horizontal line. Move down 10, 20, all right? 20 points, and then they sort of stabilize. You see this green candle here? And so this is a time and price setup, all right? Trade setup. Time and price trade setup. There, and there's time and price trade setup. Okay, and time and price trade setup is where prices move in a certain direction for a certain length of time, stabilize for a bit, and then move in the same direction for virtually the same amount of time. And so this was the trade right over here, the second leg of the time and price trade. And this was good for about 22 points. And this was a very good trade, time and price trade setup. All right. And so, and the rest of the day, we can look at maybe stochastics to guide us. Can we look at the trading zone? Well, when prices move so far outside the forecast trading zone, it's better to maybe leave things alone. And that's another tip that I want to leave you with. If you're going to be in the market, your money is going to be at risk. And unless you have a good sense based on the setup and based on if prices are obeying where the calculated trading zone is, that's one indication that maybe you're going to be risking too much if you place a trade. Now, I looked at this time and price trade. I think this is a good trade. Actually, the first leg is the setup, the first leg and the stabilization, and the second leg is the trade. So that's the time and price trade. Okay, I want to call your attention to another trade setup, and this was not quite a shooting star, but where at the top of a price rise, and here's our price rise, okay, we see an inverted hammer. And here's the inverted hammer, and the confirmation, look at this, the stochastics is a confirmation showing prices reversing. Okay, and that's it for Friday. There was no real price setup. The trading zone didn't help too much, but knowing the price trade setups, gap, support, and resistance, time and price, trend, momentum, and candlestick, we can take advantage of the time and price trade right over here, time and price trade, okay, and also this candlestick setup over here confirmed by stochastics. So that's my video for today, and this is why this should help you with these two tips to make money by taking a little less risk, being a little more wary of where the market is trying to fake you out, particularly in the early morning trades. So be particularly cautious there. Read the market, use your tools. The trading zone is usually pretty accurate. The prices are almost always going to trade within the trading zone without transposing. If you do need to transpose, that's going to be an excellent guide. Works very often in a very good way to help you trade successfully. So that's my video for today. Kind of long-winded, but thanks so much for watching. I want to help those of you who are trying to trade, having some success, but not as much as you should because you're giving it back, and you really don't want to give it back if you can recognize the symbols, the trade setups. And so hopefully that's going to help you. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.